TAO bounced back after Bittensor lost a major AI operator, and Grayscale still made TAO the center of its AI fund. The tension is simple. The network just had to prove decentralization under pressure, not in a slide deck. Covenant AI exited 3 important subnets, SN3, SN39, and SN81, and TAO suffered a sharp 38% decline during the disruption. Bittensor ETF recovers is now the phrase traders are using, but the real story is not only the fund angle. It is whether the network can survive an operator leaving without mainnet functions breaking. The crash also drew large spot outflows, with daily losses surpassing $70 million during the pressure window. That makes the recovery more meaningful because it happened while traders were still testing whether liquidity would hold. The strongest confirmed detail is the recovery mechanism. Community miners restored the affected subnets with public code implementations and no central operator stepping in to rescue the system. That matters because Bittensor is built around subnets, which are specialized groups competing to train, serve, or monetize AI work. If one powerful operator can leave and the network still restores the work, the architecture looks less dependent on a single team. At the same time, roughly 70% of TAO stayed staked during the shakeup, which shows many participants did not rush to unlock at the first sign of stress. No central rescue also changes the trust question. Viewers are not being asked to believe one founder. They can look at whether the subnet work returned through public code and miner coordination. The institutional timing adds another layer. On April 7, Grayscale raised TAO's share inside its AA-focused fund to 43.06%, making it the fund's largest single asset move. Grayscale had also filed an amended S1 for a spot TAO ETF on NYSE Arca on April 2, while Bitwise had a similar filing. Bittensor ETF recovers does not mean approval is locked in. It means TAO is now sitting inside a story where operational resilience, fund positioning, and an SEC review calendar are all colliding. The official decision window is expected in August 2026. Grayscale's timing invites speculation, but speculation is not proof of inside knowledge. The safe reading is narrower. A large fund manager increased exposure before the disruption became the main public story. The protocol change to watch is BIT11, also called the conviction mechanism. It would require subnet founders and stakers to lock alpha tokens and build conviction scores over monthly cycles. In plain English, it tries to reward longer commitment instead of fast ownership grabs. Tokens cannot be withdrawn until the scoring interval ends, so the design aims to reduce sudden instability inside subnets. That could make Bittensor stronger, but only if builders accept the lockup and the mechanism does not create new bottlenecks. The mechanism also changes incentives for subnet ownership. Instead of rewarding whoever can move fastest, it tries to favor participants willing to lock capital through a full scoring period. Bittensor still has real activity beyond the recovery story. Shoots AI accounts for more than 14% of daily network emissions and processes more than 50 billion tokens daily. Targon Compute has contributed to Intel's TDX whitepaper and projects more than $10 million in annualized recurring revenue. The network has 128 active subnets and plans to scale toward 256. Those details matter because ETF attention without useful subnet activity would be thin. The stronger case is that Bittensor can show both institutional interest and live technical work. A subnet processing real workload is different from a token narrative. It gives analysts something concrete to compare against staking levels and fund demand. The open questions are not small. Large spot outflows followed the crash, ETF filings can still be delayed or rejected, and a 43.06% fund allocation does not guarantee broad demand. Bittensor ETF recovers only becomes more than a search trend if the subnet recovery holds, BIT11 lands cleanly, and the SEC process keeps the product visible. For TAO, the next real test is whether users keep staking and builders keep operating after the first recovery bounce fades. The clean signal is operational, not emotional. Can the network keep adding useful subnets while the fund review calendar moves forward?